Good morning and welcome to the Forex Daily Update, brought to you by Pepperstone on Wednesday the 15th of August 2018. I'm Darren Sinden and you can follow me throughout the day on Twitter by using @ds_Pepperstone. Right, let's take a look at overnight changes and price moves to be aware of. And despite the Turkish lira regaining some composure yesterday, European majors and Australasian majors have lost further ground to the US dollar. The euro and the pound sterling down by around 0.2% against the US currency. Bigger falls in the Antipodes, however, with the Australian dollar losing 0.47% and its New Zealand peer 0.29% against the US currency. The US dollar also made gains against emerging market currencies, the South African rand falling by a further 1.2% against the US currency. Dollar index for its part continues to push on, 96.86. It was trading shortly before we recorded the video, up by 0.13% and looking likely perhaps to march on that 97.00 number. Okay, well, what's on the calendar? Events that may move the markets today. Please be aware we've got an ongoing meeting of European finance ministers today. Data we've had out already from Australia, Westpac consumer confidence data for August and wage price index data for the country for the second quarter. The consumer confidence number down 2.3%, probably helping to explain some of the weakness in the Australian dollar. We jump forward to 8:30 and 9:30 respectively GMT in the UK for consumer price index data and retail price index data, two key measures of inflation here for the UK economy, and that data follows on from unemployment and wage data that we saw yesterday for the country. We jump forward then to 12:30 and cross over the Atlantic for retail sales, ex-autos and inclusive of autos for the month of July out of the US, and that'll also be accompanied by unit labour costs, non-farm productivity at 12:30, and then at 13:15 we'll have industrial production for July and capacity utilisation for the same month. We fast forward to 1400 GMT then for the only central bank action of the day, a speech by the German Bundesbank President Jens Wiedmann, always worth listening to what he's got to say, of course. And then there's a significant break until 2350 when we'll have a raft of data out of Japan, including some trade balance data and foreign investment in stocks and bonds. Right, breaking news and comment then that's caught my eye today. First of all, as we noted, the US dollar continues to strengthen at the expense of its peers in Europe and Australia. It seems likely to me that divergent economic performance and interest rate differentials are a key cause here. Meanwhile, risk assets are still not finding favour despite a semblance of calm. The Hong Kong 50 index has moved to a 13-month low despite the Turkish lira regaining some composure yesterday. And the problems for emerging markets haven't gone away. Indonesian imports, for example, for the month of July have jumped by 31.5% when measured year on year versus forecasts of growth of 14.1%. The country's trade deficit grew to $2 billion as a result. This is the largest seen in Indonesia for 5 years. So there are still plenty of problems and things to keep an eye on in the emerging markets despite the calmer markets in Turkey. Right then, food for thought, something to take away with you into the trading day and beyond. Why not think about this? Are the markets now pricing in slower global growth in the economies outside of the USA? If they are, then it may go some way to explain the current weakness in sterling, euro, the Aussie dollar and others, and of course the significant strength, the resurgence of strength in the US dollar. Long-term indicators do suggest an ongoing slowdown, and this just as European QE starts to wind down. And the two charts show us OECD composite leading indicators over the period 1962 to 2018, and they are breaking down below their long-term trend. And perhaps slightly more up-to-date data here from JP Morgan's Global PMI New Orders Index, and you can see here that export orders are trending back into contraction territory, or towards contraction territory, sub 50, and that of course is not great news for the global economy if it stays there. Right, please take a moment to read the risk warning. Trading CFDs and foreign exchange on margin can be a risky business. If you're in any doubt about those risks, then please contact your Pepperstone account representative and do take a moment to read this risk warning. Thank you for your time.